All right, good evening, everyone. Hello. Welcome to tonight's live session. If you guys have any questions, please post them in the chat, whether it be Twitch chat or the Discord. Any questions that you guys may have. Maybe some of you struggled with today's price action, and if so, I will be able to cover over your troubles that you had today. What is VWAP? You're trolling me. So, I'm just gonna let everyone get into the stream, and then we'll begin in just a few minutes, just a couple more minutes. Okay, yeah. So I'll write that down, Gunner. How are participants in the market trapped? I think that's a great question because I feel like it's overused, right? I feel like that term trapped is overused, but it is very much so an occurrence in the market. My day was great. I had a great day. I had over 12% on the account today, riding winners and taking pullbacks, trading the same thing that I always trade. Yeah, exactly, HP, exactly. Shorts are trapped, right? I feel like everyone has said that at some point. How about your day, Simo? All right, and while everyone is getting in, looks like we had a pretty good green day today, right? 124 to 55. Also in the profits as percents channel, starting from the day. Let's see, move up. There we go. Minnesota Tom, 10% on the day. Crusher, $100. Starkiller, $53. JD Claire, 38% on his account. Arsalan, 43% on his account. Dave, 5.5%. Green Squirrel, take a little tag, 3%, not a big deal. Square One, $50 in the day. Congrats. 4.5% from Poetic Genius. He's taking some notes here. He says, lessons learned from live stream. No stop loss. Or no, not no stop loss, but it says stop loss, no bias or bullish and bearish perspective. At any point in time, my trade can fail, and I have to be prepared for that. Exactly. Django says, from a 28 loss, sold puts too early. Patience got tested, and today allowed him to come back green. 2 out of 3 trades. Nice. Green on the day. On solo, 3%. 10, 1%. Whack, $2,000 on the day. Bert came back from a red day on his account. Congratulations. Going, 5.4%. Cash Owen, 3% realized on the account. Zion, 17% on his account. Ane, $100 on his. Square One, $70, right? And $100 on it was a $600 account. That's fantastic, right? And that is very much so manageable on 1 or 2 contracts. Trader Galley, 2%. Whack, 41% on this QQQ trade and 39%. Another 55%. Record day from Knobs, congratulations, 6%. Don got a little tag, but he understood why he took a loss, which is important, right? JD Claire, 55%. Hannah, if you guys are in the group, right, make sure that you are paying attention to Hannah's profits and percent posts. She writes out notes. I don't know if she's still trading 1 contract at a time. She would have to confirm that with me. I'm not sure. I don't know. As well as if she is still trading 1 contract at a time, right? People are like, how can you make hundreds of dollars trading 1 contract? It's very simple, and it really will help you in your journey hold on to winners and identify strong entries. So, Biomech, $64 on the day, Dragon Sum 3%, and Floraman 3.89% on the account. Good job, guys. Good job. Also, in tonight's live session, I do these 3 to 4 times a week in the Discord, right? And one second. These are all recorded and posted in this Google Drive link, right? It has how to handle losses, our weekly prep that we have each week, how to straddle, strangle, trade planning, supply and demand, right? Lots of good things, right? So like you can type in like options basics, options contract, main option strategies, how to execute options trades on Thinkorswim, right? And supply and demand, bunch of supply and demand refreshers and TA stuff. I've cleaned this up to where it is, I think there's like 60 videos in here now, but I do believe that all of these are crucial if you are a part of the group to understand my kind of point of view in terms of trading or how to day trade. Okay. Yes, that is a part of the Patreon. Yep. Are you personally better when you paper trade? Now, many traders, I feel like every trader is a millionaire, right? Paper trading, and that's just due to the disconnect of emotions. And then once you start, trading live, traders will go through that kind of back and forth with themselves, like, oh, why was I so good on paper? And then when I'm trading live money, I'm doing everything wrong, right? And I'm going to be touching on that kind of emotional attachment to money in tonight's live session later on in the session. Someone also asked, is it best to stick to one stock and just learn to consistently be able to make? Yeah. I mean, like, I traded QQQ for a long time. I still trade QQQ every day. And I do recommend many of you guys to trade just one or two tickers, right? I know Diesel trades one ticker, right? It's Facebook. And everyone has their favorite thing, right? My favorite ticker is QQQ, obviously, right? So whatever it may be, I recommend like IWM, AMD, Apple. They all move relatively slow and are somewhat cheaper, I guess, in the sense of trading, right? Thanks for the sub. Also, this is the new month for the Patreon, right? I have opened up just a few more spots for the group, right? There's 4 spots remaining. This is the boot camp. This is kind of different. This is kind of a streamlined process of, hey, you get 1 month in the Discord and you get 10 videos showcasing the absolute basics of my own strategy, right? But this is just kind of entry into the Discord, which is the price listed right there. So there's 4 spots remaining. So I'll also be going through the giveaway tonight. I'll be doing the giveaway for those of you who stick around. We'll do it towards the end, and we're going to get into it, right, if you guys are ready. So, going through, welcome. It is June 1st, right? First day of the month. We have a new chapter ahead of us, as well as, we really should be able to focus our goals and ambitions this month on remaining patient within our trading journey and focusing on refining our skills that we already have, right? I feel like many traders get into the notion that they must continue learning new strategies in order to progress, and that is a complete false statement, right? Or false ideology, I truly believe. So in tonight's session, I will be going over entries, right? How to identify entries, how to find, what is going to work for you based off of risk management. I'll be going over risk to reward, some supply and demand, as well as how to hold on to winners, right? How many of you today got puts or calls, whatever, and sold it for, let's say you enter here and you sold here and then you missed out on the rest of the dump, right? How many traders experience that kind of, paper hand trade today? Yeah, GT, right? I mean, it's okay, right? We're all here to learn and, gain data from each other, right? Yeah. Exactly. It happens. It happens, guys. And something as a day trader, something that you should really understand is that you are never going to completely capture the top and the bottom, right? My goal as a trader is to capture pieces of the market, but you can, improve how well you capture those pieces of the market. All right. You will always leave money on the table, right? Say it with me, right? Say it with me. You will always leave money on the table, no matter how long you've been trading, no matter how good of a trader you are. You will not be able to capture point A, point B, the entirety of the move, right? You are not perfect. No one's perfect. We have to realize that we're only human, right? So, moving forward, entries. I got a lot of questions about entries. If you guys watch the Twitch VOD from today, we literally hit puts right here. I can pull up and it like dumped instantly, right? And so let me show you. It was the 312Ps today, okay? So right here, 312P scalp, risking the high of day at 10 a.m. Does anyone know what 10 a.m. is, or around that time, right? What is 10 a.m. to us in the House of Stacks, right? Stacks time, right? But what is Stacks time, right? Well, you guys say it all the time, but what is it? Volume, right? If you really think about it, Gunnar just said London, right? It's always a strong kind of, point to make thinking about the other time frame or zones around the world that are trading, right? That is 11:30 is London close. So at 10 o'clock, that is our 2:30 prior to our 4 o'clock close in the US, right? So would you not consider that London power hour, right? If you really think about it, around 10 a.m. and 10:30, you see strong fluctuations. Maybe not a reversal, but you see strong movements backed by volume typically, okay? So at 10 a.m., like I showed you, right? Right here, nothing's edited. You can see if something's edited, like, I'll put like, I'll change this. We'll just put a smiley face, right? See, it says edited, right? You can see that. This right here, my 312Ps, risking scalp, risking the high of day at 10 a.m. is not edited, but it was called out. Now, I want to break down this trade or what I was looking at so that you guys can try to piece that together. So, I have here the chart from this morning. We've marked out all of our zones, everything like that, right? This is the previous day high supply. Previous day high supply, a larger supply over here, right? You can see a large upper wick shoves down, right? This is a zone, another zone, and we have some targets towards the lower spectrum of the chart, okay? So when price pushed up, it was a tweezer top developing on the 10-minute in this supply zone. I said it this morning. I hate taking calls, right? Going long in supply. I hate it. So I had calls much lower, but I was not taking calls up here. This is too risky, right? You do not have good what, guys? What do you not have up there? Risk to reward. Exactly, Bagel, right? Bagel's hungry. Bagel's going to go in tomorrow, fucking kill it. You do not have good risk to reward. So breaking it down on a smaller time frame chart, we can go on the 1 minute. Okay, let's look at what I was looking at. Okay, you had the high of day. Now, something to keep in mind is the strength of a break, right? So normally, I'm going to show you two things, okay? This was the high of day. And technically this was, right? But this was before the break. This is the low of day. Which break looks stronger to you, right? Is this not a strong break compared to this? Right, so yeah, we were in calls and I scaled them out for a high a day, but once I saw that we were rejecting here, we rejected here, and once more on this candle, I took puts there, right at 10 a.m. Look at the 1 minute candle, 10 a.m., right? So 10 a.m. hits, We take our puts. I said risking the high of day. So if price was going to push up like so, and sure, I'll take a little bit of a loss, right? If it's going to surge, if it was a green candle, surge up like that, right? Then I would have stopped out. But I have low risk, right? I have low risk. So, but two things are going to happen. I'm either one, going to get stopped out, or two, the trade's going to make me money. Now, it was strange because as soon as I hit this entry, it dumped. You guys can go back on the VOD and watch it, right? We got around this area, around $1.80. It pushes up, instantly 240s. I'm saying scale, right? I scale half of my position right there just because that was like too easy, right? It was like very strange. So instantly it pulls back. Now, many of you would have done what? Eastern time. Many of you would have done what, right? Stopped out. Well, if I have an entry of $1.80 and price pushes down to $1.86 or $1.65, $1.66, why would I stop out? If I've taken profit up here already, I've cushioned the trade. So if I have 180 and it pushes up to 240, I get a $50, $60 contract gain just about. Am I going to stop out for a measly $10 or $15? Absolutely not. This could shove down further, right? And someone in the group was talking about, hey, the knife down first EMA pullback, that's something we take. And I said, yes, but it wasn't as clean as a 1 minute EMA rejection, so I didn't take it. Maybe they did. But it was key. I missed out on the first pullback for the ladder, right? But on the second pullback, which is the break and base, right? On the pre-market high that I had labeled, this wasn't technically the pre-market high, but it was this level that I had. It broke in base, holding within the 9 and the 20 EMA. Now, many of you need to understand the EMAs confuse a lot of you because you're not finding, the proper time frame for the situation at hand, right? Everything is contextual, right? I can't go in, you just can't go throughout life doing or applying the same ideology or the same kind of strategy in on everything, right? Nothing works 100% of the time. So going through here, I had my entry, right? I don't get stopped out. What keeps me in the trade? Well, I know based off the 9 of the 20, if the EMAs are holding me strong through momentum, the 9 and the 20 on the 1 minute will be held. That's what's holding me in on my 312Ps. You will find out later on these go for $300 plus a contract. No, I do not have a full position size towards the end, but I still am able to push out that last 10 or 15% close to that $300 per contract gain, right? And that's worth it. You will make your base hit trades. So yeah, look, you may be like, whoa, Maple, you took an entry here and you scaled out half there. You should have just held on all the way up there. Yeah, sure. I should have, right? But that's not, what's going to truly happen. You have to be able to lock in profit consistently. I lock in my base hit profit and I hold my core to turn my base hit trade into a home run. These go over $5, right? From $1.80. That's a huge gain. All right, so moving forward. Now, those of you in the Twitch chat, right, what are your best entries if you miss the initial knife down or spike up, right? When we begin to break out of that consolidation phase and, we begin the trend phase, right? The retest, right? But what retests? Shiny object says first or second pullback, and that is absolutely right. Right? So you can see here, knife down, first pullback. All right. I miss it, but I'm making money in my 312, so I don't care, but I'm looking for a ladder. I want more, right? I'm not being greedy, but I'm trading based off of risk. I keep saying, I'm not going to take an entry. I'm not going to take an entry. I can't take one here. Even though I would have been making money and had a better entry, I stick to my rules. Okay. I'm not going to take an entry here, not going to take an entry here, right? Where do I take the next entry? Right here. 309p ladder at 10:11 a.m. Not edited, right? Risking the 1 minute EMAs. So I have risk. Okay, we said 10:09. Let me pull that back for all of you, or 10:11, excuse me, on the 309s. 10:11 a.m. So this is the 1 minute chart. You'll be able to find 10:11 a.m. is right here, this candle, right? Risking the 9 and the 20 EMA. So if this trade goes against me, I'm going to use the 20 EMA as my risk. I accept that risk. You must be able to accept that risk. Now, when you're identifying an entry, it comes down to the acceptance of risk, as well as having two levels of confluence, right? Two levels of confluence in order to enter. Now these possibilities, right? I've written them down in a checklist. You don't have to have all of them, but I do require at least two of these. It needs to, one, be a pullback entry, or two, near a key level, whether it be a previous day or pre-market high or low, or just an intraday, support level, resistance, orb, whatever. As well as, aligns with, this saying, puts on pops, right? Or calls on drops, right? So, meaning this pushed up. I'm not taking calls up here. The people who are in calls already made money. You take puts on the pop, right? And later I'll show you where we take calls, right? I mean, this is, on the drop, someone added calls, they scalped it. It doesn't mean it's going to follow through and complete as a successful trade, right? As well as needs to have either EMA or VWAP respect. Remember, it depends on the context. If it's pushing up to VWAP, right, you need to be able to base a trade off of that break and base or the rejection of it, whether it be the VWAP or 9 and 20. Okay, so what I had here for my entry, one was a pullback, two was a break and base on the low of day, and three, I had my risk sorted out for me by the 9 and the 20 EMA. So that's three levels of confluence. Also, maybe you could say a fourth because it was the second pullback in the rally. Everything after the first and second pullback is risky. You can still make money on it, of course, but for myself, it is somewhat higher risk, meaning you should be scaling out or managing your stop loss, your trailing stop loss much more closely. Okay, so this note here says, everything after the first or second pullback is still viable but risky. Be aware of a washout. All right. Now, when I say washout, it's probably a term not many of you, have heard from other traders. It's just something I say, right? But what I mean by a washout is the covering of the shorts, locking in profit, right? This is a point in time where shorts are locking in profit and wiping out all of the late entries. So what I mean by that is this: first entry or entry here, even the first pullback and the second pullback, are they washed out by this little cover rally? No. But every entry after that most likely is. That would get washed out. This would get washed out. This would get washed out, right? You would have either been flat or red on all of these entries, even though they were good entries, right? Puts on the pop, puts on the pop, and puts on the pop once more. You are late to the trade. That's why I always stand by this, saying that, later entries dictate quicker profit taking, right? Protect yourself. What happens is that, like, traders, newer traders especially, they're like, oh, wow, price action is slowing down. Now I can get a good grasp, and now it's time for me to enter. Well, you're actually trading the scalps. You're actually buying the contracts that I'm scaling out, being the liquidity. And even though it eventually may work out, it's not the best kind of setup, right? In comparison to the early. You can still make money. Like I said, they're still viable, but they're much more riskier. Not much more riskier, but much riskier. Excuse me. Also, if something feels talking about price action, if something feels like it's stuck, do not be biased towards one sentiment. So what happened today was rather key, in my opinion, due to the fact that, Wednesday last week, we rip up off the open. Thursday, we just rip up off the open. Friday, same thing. And then we get a little pullback, but then they, rip it up still. They get stuck at 311. A lot of traders, got late to the party on the whole relief rally move, right? Hey, this is shoving down, shoving down, shoving down. Here's, 3 green bars. Traders are like, oh man, these shorts are getting squeezed. I need to just, go head first into calls as soon as open hits, right? And what happened to those traders? Sure, it worked, but they eventually got punished. Okay, now what? If you zoom in on the 1 minute, right? Price pushed up, rejected, pushed up again, rejected, pushed up again, rejected. If you're sitting here only trading calls this morning and you did not see that price was, feeling stuck or could not breach past the certain level, why are you biased towards that one sentiment, right? You must be able to, at some point in time in your trading career, remove the bias from your trading to allow yourself to be fluid in price action. I trade long and short all day. I'll trade, calls and puts all day. I'll trade them at the same time. You guys will see me trade them at the same time. I mean, there's a whole, straddle and strangle strategy that our video that we posted in the Google Drive link, right? I want to cover over risk to reward, right, a bit here. So, when I took this trade off the open, right, this is the options contract in the 312s. We'll go to the 1. Right, we could see that here, we could see, let me clear this out. We could see, right, if you're trading up here 312s, well, 312s would be in the money right at this point. I mean, there's 312.08, right, they would be in the money. So I traded the closest strike to being in the money, right, what I typically do, as well as looking at my options contract chart, right? So you could say, well, hey, there's a level here, and there's a, that was the support. It was broken through. Obviously, with theta, it's going to fail the supports, or, it's getting pushed through, right? You got a higher high, a new high a day on the Qs. But, right, if you zoom in, well, hey, it bounced here, 955, rejected, right, on the Qs, 955, rejected. Once again here, 957, well, 957, rejected. It's holding a flat line here at $1.50 to $1.51. And once again hits it. But it comes much more violently. I get filled around $1.80 here. It pushes up, right? Well, even if I got filled at a, let's just say you slap the ass, let's say, $1.80, right? That's 18 cents would be your 10%. To this level here, that's 15%, right? I typically, for risk to reward, I trade 10 to 15% on a stop loss, but I see a pretty clear support here. I don't mind that, as well as the confluence with the supply. I'm taking puts, rejecting off supply, large upper wicks on multiple time frames. If you look at the 10-minute, it was actually a tweezer top. I had the validation for a trade, right? But many of you are scared when taking that trade, right? And why would you be scared if you had, all the planets aligning for this one trade? Why would a trader be afraid? Right? There's no wrong answers. Not seeing the signals. Right, but what if you have the confluence, but you just don't take it, right? I've talked to so many of you. Oh, I charted that out perfectly. Oh, man, I called this out, but I didn't take any, right? I didn't take any, right? Lack of confidence, right? Doubt and fear, okay? Really, it comes down to the failure of acceptance of risk. So look, right, even if I got here, $1.80, it jumps down to $1.50. Let's say I stop out, worst case scenario, I stopped at $1.40, right? Worst case scenario, you lost 30%, right? Worst case. It happened. I mean, if you're trading options, you never lost 30, and you say you never lost 30%, right? You're out your damn mind. All right, so $1.80, right? 30% max loss, max pain on the trade. We didn't want to even risk that much, and I scaled some out, right? You would have missed out on a 200% runner. Let's say you don't even get that, right? Everyone likes to say, oh, well, it went to the high. Well, what about this first leg? 100%? Right? That's still 1 to 3 on a worst case scenario. If it's 1 to 15%, right? I mean, what is that like? 1 to 6, 1 to 7? It comes down to the failure of acceptance of risk. I mean, accept the fact that you may lose trades. I mean, you're digging through piles of trades trying to find the one that's going to work, right? Don't sit there and shoot blindly, but find the one that is going to give you good risk to reward and follows through with the sentiment that's being displayed on the underlying chart, right? So, I have another trade here, right? The ladder, okay? Well, looking at the ladder, right? You have your support level here marked by this pivot, this red candle. Red candle bounces up. I'm like, hey, I'm going to take this entry. I'll stop out over the 9 and 20, which is practically this pivot point right here, right? Pushes down, pops up, pretty tight risk. So I'm either going to take a loss under $1.20 or it's going to make me money. Well, you can see here, right? What did you risk? Right? About 15% once again. So 15% stop loss risk. All right, 15%. And I'm not even going to say the top. I'm just going to say up here. You had multiple points in time to scale, and we'll go in the middle, right? 73%. So let's just round it up, 75%. 75% median gain, right? That's what most traders, I guess what it would be the mean, but most traders made around 75% had they taken that ladder entry, which many of you guys did on stream today, right? I don't know if anyone remembers, but who took that ladder entry, the first green pullback on the 1 minute to the EMAs? You didn't see it on the 5 or the 10. Or how are you gonna get an entry on the 10 there? What about the 5? Nope. What about the 3? Right? Not even really. It doesn't even look like an entry on the one it gave it to us. Right? JD Claire took 2 ladders. How do you identify the top of a pullback? All right. Now everyone wants that's the thing that, exactly. I feel like your question is super key to what I'm talking about. So thank you for asking it. How do you identify the top of a pullback? Does anyone have an answer before I answer it myself? How does one identify the top of a pullback? Tweezer tops or lower high, but how do you know that the candles are going to stop right there? What as a trader, right? How can I figure out that it's going to surely reverse right there? Snarky, thank you. You can't predict the exact top. You can't. You freaking cannot. What can you do, guys? Nay, thank you. Right? Look, let's blow them up. You don't. So you take the risk. Take the freaking risk. If I was sitting here being a baby back bitch, not taking any trades because I was scared that I was going to get a big boner green candle, right? Then you didn't make money on the trend at all. Right? You didn't make money on this entire dump of a day because what? You couldn't accept the risk. So, I knew here. I took the red candle like I showed you. I took the red candle. I was given a little bit of wiggle room, right? The 1 minute, 9 and 20, but really I wanted this pivot to hold, right? And that's it. Same thing for this. Hey, this is pushing up to the EMA, right? This is your pivot. It's shoving down. Maybe you take puts, right? On this falling candle, you don't want price to push above this. Well, what happens? That's your low support, most recent low. You enter here, knifes down, you did not get stopped out, you got a pivot low break, scale some out, move your stop loss along the way, price comes back to break even, you can see the arrow lines up, and then what happens again? they crack another low, right? From this entry, you scale. If you crack a lower low, you scale and move your stop loss up. So, how did I know that this was going to reverse? I didn't. I just took the risk, right? But it's good risk. How many of you have heard that term, right? Good risk. It sounds like an oxymoron because everyone thinks risk is bad, right? Good risk to me is 10 to 15% near an EMA or VWAP or 200 EMA, right? Or pivot point, whatever. Find it, create a theory, or plan out your trade, a trading plan for whatever it be, a day trade, swing, scalp, whatever. All right, and follow through it. One thing that I also so wait, let's see. You prefer to take the red candle than a shot on the green. Is there a reason? So what happened here? You can go back and watch the VOD. I wanted to see if this was actually gonna push up and touch the 1 minute 9 EMA, right? Like some algos hitting it or something. Once I saw this candle, right? Because it's gonna close like that, but it was developing. It was like pushing down, and then I hit it. Right? And then I'm like, okay, well, I want a lower low. We cracked the lower low. There's some wicks here. Buyers deciding whether or not they want to stop out. Knife. Gunnar was talking about how do we identify if buyers or sellers are trapped. That's a great point. So what happened here? This is a buyer, right? A lot of people bought right here. Okay, well, it knifes down. They absorb once again, and it knifes through it. The buyers that don't stop out here, right? They get into what? Their emotions. They're like, oh, I don't know, right? The word trapped, right? They're not like it really depends upon who you're talking about. Retail traders don't really get trapped in comparison to like market makers with very large orders or banks or something like that or whatever, right? But if you're moving the market, having a reaction on the cues, you're a hefty position. So this was a hefty position. Look at the volume, right off the open. These amount of buyers here, if they don't stop out, right, like look, they try to buy some. This is actually, I believe, short covering. They it just gets they get obliterated. Knife down, right, knife down, and they're stuck, right? Once they should have scaled out for their whatever X amount of small percent loss, turns into a much larger loss because their emotions trap them into the trade, right? So like, this right here, these are buyers, these lower wicks. They're like, oh, maybe we can save it. Maybe we can fake out breakout right here. From a technical perspective, that was not ever going to happen, right? And then what happens, right? They see that that's not going to happen, and then they begin to sell, right? Sellers on top of that. Sellers, you guys have to realize, sellers hit on green candles, right? They will sell, or you have the momentum, kind of impulse shorts coming into this. Smarter shorts are hitting it, puts on the pop, right? Calls on the drop kind of ideality. Yeah. So, do I ever look at the confluence of time frames before taking calls or puts? Yes, I look at 1, 5, and 10-minute charts, and I check them, right? Tweezer tops, how it's closing, 3-bar plays, all of that stuff. All right. Moving forward with risk to reward, this was one of the last trades that I took, and it called out, right? You guys will understand, or will soon realize that the way I trade is understanding both sides of the chart, right? Understanding both sides of the actual trade, okay? Meaning that I'm not biased towards one sentiment, whether it be long or short. I really try to give weight or give voice to both long and short perspectives. All right. So when I, right before, what is this at 120s, right? I said, or 122, I said 10-minute 3-bar play. All right. 1 second. Let me move this out the way. Right here. This is exactly what I'm talking about right there. So when you have a 3-bar play, a lot of traders believe that it's a continuation pattern, which most of the time it is, but it also is a neutral pattern in my own perspective. I believe that it will show you where buyers and sellers are stopping out, okay? So what you would do, I said the 10-minute 3-bar, right? 122, a 3-bar play. You get a big stick, right? Big green candle or red candle, it doesn't matter. And the following candle holds within the 50% retracement of that candle, that, the preceding candle, right? And it holds it. It holds, look, there's the 50% retracement halfway through this candle. It's held, all right? So what did I do? I draw the high and the low of the original doji, right? The OG doji. So I say here at 122, this is very early. Look at the move after. Look how, I'm right here talking about it. Mark the red small body candles high and low, just like we did. Look for the candle to close on either the support or resistance, depending on your sentiment choice. So if you want to go long, or if you're already long, you want the candle to close on the resistance. If you're taking a short or you're taking puts, you want the following candles to close on or below the support, right? Signifying that buyers or sellers have covered or stopped out, all right? So, it is within its 10-minute, 9, and 20 EMA, so it could reject off of this or break in base. So you can see here, the 10-minute, 9, and 20, it's popped into this kind of, area between the 9 and the 20, and it could break in base, which it does, or reject, which it does not. But it bases here, pops up, no candles closing below the 9 EMA. This is on the 10-minute, right? I said a 10-minute 3-bar play. All right. And I say here, if it continues, we could see 308. If it rejects, look for 304, right? So I give weight to both sides so that I'm not left in the dust. Like, what if you were like only trading puts here? You didn't give any weight to the bearish or to the bullish perspective, right? One, you got squeezed, and two, you didn't make any money, right? That's called being biased, right? We should not be biased as traders. So what happens here? No candles closing below, no candles closing above. You did get a candle close into the upper wick here, but where did I get that 308 level from? Right here. This is 307.85, practically 308. That's a whole dollar psych target. Also, it's VWAP, right? So what have we done here? We've marked our risk for both sides, right? This right here, short risk. Sorry, this is super small. All right, long risk. All right, so we've identified the risk. Okay, you get the bulls closing a candle into the upper wick. Doesn't show that they've stopped out yet, but you're getting upper wicks over the resistance. The sellers are debating whether or not to cover. Once the candle closes on or above the resistance level, look at the reaction after. It straight rips up to 308 or VWAP, right? Why would I mark this? Well, this is a large upper wick. You can definitely see where sellers were located. Hey, large upper wick, pop, pushes down, pops back up, sellers hit it again. Where do you think sellers are going to meet you once more, right? You get a rounding top here, tweezer top, whatever you want to call it. And but for this move right here from 305.50 up to 308, you capture 2.5 point move on a 0-day or 2-day, whatever. And that is an amazing trade for you to just, mark a support and resistance line, gauging both sides and holding on for your true targets, right? We can go back in the trading floor right here. Right here, 123. If it continues, we could see 308. This is at 123. All right, when did we hit 308? At 220, right? It says 1420. An hour later, I had the target of 308 1 hour before it actually hit it, right? And that's just proper planning and experience, okay? One second. So, also, right, looking at this, how could you have traded it, right? Now I trade now in the afternoon. I trade a little bit of smaller size, right? I wouldn't say smaller size, but like half size because I'm trading with profits from the morning. Many of you most likely got wicked out of this, but on the tweet that I posted earlier, right, and what I said in the trade, in the trading floor, I said look for candle to close on or either support or resistance. Close. Look for candle to close, right? I can highlight it right here for those of you visually impaired, right? Look for candle to close. Did a candle close below the support? Right? We're on the 10-minute, or here, it's right here. Did a candle close below the support of this doji or 3-bar play, whatever you want to call it, right? Absolutely not. So if you got wicked out, it happens, but you can use the 84% rule, which is a re-entry on the original price if you got wicked out, using the same kind of risk or the new low as your risk, right? So this was a fantastic trade. Just gauging, risk to reward, and the confluence. Hey, I have a support level. I have the 9 EMA, could break in base, which it does. And you're looking for the resistance channel to be broken. I did have 308 as a target, but that was something that may occur or may not occur. It's not something that would be for certain. Quick. So risk to reward here. I do recommend a 1 to 3 risk to reward, meaning if you're risking 10%, you should try to aim for at least 30% gain on the trade, which is relatively simple trading options depending upon what you're trading or what expiry. Even on a further expiry out, like a 4 DTE, whatever or more, you can still hit those trades. It may take a lot longer, but it's still very much so possible. Something that I want to note, right? Many of you who got chopped up, who was like, oh man, power hours here, right? I hate the last 30 minutes of the day, but oh look, 220. Okay, so around 2:30 to close, right? Who got chopped up during power hour? Shorted every pop, great Denali, right? I know that many traders got chopped up here, right? How could you have traded this? Now, I know on a 0 day, it's a bit more difficult to manage risk, especially towards the end of the day, right? But you can see here, you did have this high here. Okay, right there, 308.72. If you're looking to take puts, you're probably looking at 307 Ps. Right, and this high was at 1440. 240. See, look at that. This is theta for you. This is why I hate. I always recommend that you guys move to the next expiry on these pushes out. So like we'll do the 307 Ps here. 3. There we go. Much better, right? You guys see that you're not hitting consecutive lower lows, even though it's holding a support level or a resistance level, right? Right here, 220. Right here. What is that? Is this not? This is like, hold on. This is a 10-minute chart. 1 second. Where was the peak at? Right here. Okay, 245. 245, right here. Okay? So, you have this. This is your risk level. Well, if I bump it up on a 5-minute, let me maximize the sell. Right, you can see right there, 274 is the low, right? So if you have the support level, you want to see what 10% from the low is, 10 to 15%. Well, use your trendline tool. 10% is right there, 246, right? Or you could just do the math, right? 27 cents. Okay. So 10% stop loss from support. So many of you are risking around 10% or at least aiming for around 10% of a stop loss on a trade. Well, you can see here that had you bid it in on the previous support level, you would have gotten filled, not stopped out. It does push down, but you don't get stopped out. 10% is right there, right? But from the support, it hits what? This resistance level, right? Supply zone, whatever you want to call it. It hits it here. So from this point to this point, you can see it says 23%. So you're already 1 to 2 at this level. 1 to 2 risk to reward. All right. And then pushing from this up here at the high, that's 36%. Maybe you just get out at 30, right? Even right there, 33. 30% is right there. 30% is right here, right? So now you're 1 to 3 risk to reward at this point right there. So you risk 10% to make 20% or 30%. It really comes down to that. But the reason why traders fail during points of consolidation is due to the fact that they buy here. And what you'll see, right? Let's just say like you're in the book. You're like, oh man, I got enough buying power. I got for like one more trade, right? One more contract. Just give me one more contract. So what do? You just go to the book and you're like, oh, this is at $2.20. That's how much money I got left in my account. I'll take a trade. Okay? But what you fail to realize by not looking at the options contract chart, you know, this is at $3. $3 is not really the best entry here, right? Even up here, 320. Some of you like just buy contracts at $3.20, $320 a contract. You have to look at where you're buying in terms of the options contract. If you do not, you are doing yourself a huge disservice and most likely being someone else's liquidity or exit on a trade, right? So, what, you guys can hear me, right? Yeah, $35 buying power. Yeah, you got $35 buying power and you're looking for a $200 gainer, right? Okay. Sorry, Daddy. And we know trading options, oftentimes they offer 1 to 5 plus risk to reward, meaning like, you know, base hits for me, or I guess a little heftier than a base hit, is around 50% a gain on each trade, right? And it's not for everyone, right? You know, some traders, they get stuck with 10 to 20%, right? They have paper hands, or they're just like, oh my gosh, I made a green trade, let me sell it all, right? And they don't let it grow or develop like you should. I mean, honestly, you know, I mean, at this point, right, I think it was a 3 minute, right? Did the 3 minute tell you to stop out on this trend? It did not, right? This would have scared some people if they didn't have a good entry, right? And that's the difference, right? Having a desirable or good entry in terms of, the chart being displayed in front of us, because, you know, I had my entry up here. I don't get stopped out, but someone who bought right there may have gotten stopped out, especially dealing with theta decay. So, JD Claire said, hey, I bought 308 calls for 36 cents and they went over 200% on that bounce. There you go, brother. Look. 210%, right, dude? Come on, man. On a little support and resistance line, right? Nothing too spicy, okay? But you know, when we're pushing through here, the EMAs holding on really comes down to, like, you know, your detachment from money, right? You have to be able to cut the emotional umbilical cord that money has on you. Right? Money, obviously everyone depends on it, right? And especially in terms of trading, it even hits closer to home, especially, you know, emotionally, just due to the fact that, like, you're trading money, and if you have a bad trade, you're losing your own money, right? Most of, I mean, I feel like everyone here, myself included, have worked hourly jobs or salary-based jobs, sales jobs, whatever, right? You go into work expecting to make money. That's not how trading is going to be, right? But if you can accept that and, you know, improve on how you lose, right? You can 1, hold for longer, 2, get better entries, and 3, progress as a day trader or just a trader in general. Okay, so you know, I hold on to trades through my EMAs. I hold on to trades through pivot points, right? So like something like this, let's say that like, hey, you hit puts right here. I actually, yeah, no, this is what happened. I missed the puts and I took a pullback. So let's just trade it from my perspective. I hit the puts here. What time is that? 11:30. It's like one of the second to last trades I took. Oh, right here. 305p scalp at 11:32, risking near 80 cents, right? Let me get that on here. Oh, perfect. Okay. Oh, for sure. I mean, you guys should always scale or move your stop loss up, okay? All right, so right here. All right. So I say 305p scalp at 11:32 a.m. 11:32, literally this green candle. You can see the time frame down here, hovering on it, 11:32. I take it, risking 80 cents. The support level, which was right here, right? So from this level, I know cheaper contracts, not the best, but you can see, 10 to 15%. That's usually within my risk parameter. I risk 10 to 15%, right? I'll just say around 15% stop loss, right? And I end up making, right here, 30 a contract gain, 60 a contract gain, almost $100 a contract gain, right? It hits up to $2. I don't get the 100 totally, but you can see from this point at $1.80, that's $90 a contract. I risk 15%, and you can see, how did I know it was 80 cents? The support. What do you mean? Pops up, boom, right? Pushes down. I'm like, hey, this is pushing down. What do we do, right? You want to enter near the support when it's pushing down, right? This is my risk. Hey, if it just keeps blowing out, I'll stop out under 80 cents. I get filled near 90 cents, right? I risk 15% to make 90, 100% on this trade, right? So 1 to 6, 1 to 7, risk to reward. 100% gain, 1 to 6, risk to reward. I risked 15% to make that. Will I take that trade again? You bet your damn, you bet your damn money I will, right? I will always take my 10 to 50% risk in order to possibly make 1 to 3, 1 to 5, 1 to 6, whatever, right? And it was a pullback right here on the EMA. How do you stay into the trade? They're like, Maple, what the fuck? How did you do that, right? Well, this is my stop loss. It's a pivot. Hey, it pushed. Here, let me blow this up. It pushes down, then pops up on the EMA. That's my stop loss. Pushes down, pops up. Do I get stopped out? Does it hit my stop loss? Nope. New stop loss. Pushes down, right? Practically a double bottom. You either scale or you don't, right? It's really up to you, but you did not crack a lower low like you did the previous times. That's a red flag. You also get a bullish engulfing here on the 3. 2 red flags. EMA's crossing. 3 red flags. Hit your stop loss. Come on, guys. So going through here. I guess I'm gonna try to keep this one kind of short. We can touch on supply and demand a little bit tomorrow, I suppose. We've talked about holding on to winners and stuff like that, so we can save it for either tomorrow or the following day. Trader Galley says, hey, at some point in this lesson, can you go over how you grow a small account while also withdrawing profits from the account weekly or monthly? It depends on how small of the account. So like if you're trading a $1,500 account, let's say you make $200. I would withdraw 100 of it. You can make the $200 again with your now $1,600 account. Can you not? Maybe you lose $100. Well, you still withdrew that $100, and now you're back at $1,500 on the account, right? So Moving forward with that, I would consistently focus on compounding and slowly withdrawing little bits, just so that one, you have money for taxes, and two, you're actually making money from the market. Traders think like, oh, I can grow my account to X amount and I'm making money, right? And then blow it all up. Then you're sitting there, you didn't make any money, and because you didn't withdraw it all. Yeah, I'll be live trading this whole week. So. Yeah, for sure, Kia. That is your emotions, and it comes with experience, right? I get wicked out, I get stopped out all of the time, so it really just comes down to back testing, screen time, and showing up and dedicating yourself to the market. I slap the ask most of the time, but I also join the bid if it's pushing down, right? Like if this is pushing down, I try to join the bid to get a better entry. But normally on the Qs, the ask is pretty tight, right? So like this hit like 80 cents up to like 96 cents. It's not too big of a move here, but still favorable for a day trader, right? If you have a $1,500 account, like you mentioned, how much should you invest in one trade? It's really up to you and your risk kind of parameters, right? I wouldn't half port or full port by any means at all. So, but right, I'm gonna wrap the session up here. I'll have another one later this week, probably either tomorrow or the following day. We're gonna get through the giveaway. Okay. All right, we'll do the keyword, and I will do the keyword as June, right? So you guys can type in June for the giveaway. Thank you guys for sticking around and tuning in. I really hope that tonight's session you guys benefited from either an emotional or technical standpoint. But while we wait, right, it looks like, let's see. So right here, remember, the Discord has opened up, right? If you guys want to live trade with us, after this week, I will be in the Discord only. And I will be live trading just like we do on Twitch, right? Stating my ideas. I don't want you guys to shadow trade. I really want you guys to be able to learn how to trade. But like it says 3 spots remaining. And I do EDU sessions just like we had tonight. 1 hour sessions 3 to 4 times each week. And they're all recorded in the Google Drive posted, right? Also for the giveaway, one second. For the giveaway, this will be, oh shit, well, I have to change this link anyway tonight. It doesn't really matter. For the giveaway, HP is going to clown me on it. But this, just like tonight's session, these will all be recorded and posted into this Google Drive link. Yeah, dude, I know. And like, some of the lessons that are in here, TA refresher, right? Trading larger time frames and tunnel vision cure, how to execute options, trades on Thinkorswim, how to control emotions, right? Trading and trusting your systematic edge, my pre-market channel strategy, supply and demand, important main option strategies, how to review a failed trade, my favorite setups and how to trade them. I mean, so much good information here that we've recorded since the inception of the group, right? So, also, guys, I will be live streaming my trade trading ideas tomorrow morning, 8:30 in the morning. I hope to see you guys there to trade with us. Really, I just hope you guys are finding benefit and you guys are seeing some sense of improvement in your own trading, right? So, but I'm going to select 3 winners here for a month membership in the House of Stacks. These I want traders who are new to the group, right? You can't already be a member. I want traders to be able to at least have a chance at their experience within the Discord if they haven't joined it already. So the Drive link is posted in the Start Here channel, but I'm posting a new one after we wrap the session up, right? It's the month of May and I didn't update it for last month, so I need to update it this month. Okay, so jalapeno juice. Here we go. we're gonna do 3, right? So here we go. I think this guy's in the group. Snoop Doggy Dog. I don't know. Is Snoop? He's in here, isn't he? I'm pretty sure. Yeah, he is. Sorry, brother. All right, we'll do Tomahawk 5575. Right, this guy just he's been a follower for about a month, so I'll write it down right here. And to claim your membership, please DM me on Twitch, okay? So there's Tomahawk. Make sure you DM me on Twitch. We'll do 1 more, or 2 more. RJJ. I don't know if RJJ is in the group or not. It sounds familiar. No, it doesn't look like it. I don't know. Could be. Okay, 1 second. All right, and 1 more. Here we go. Who's ever clock 44? All right. Who's ever clock 44? All right, all right. So we'll do 1 more, and I'll do. How does this work? Oh, random number. Oh, that's fun. All right. You guys pick a number 1 through 100. All right. Let's see. 1 through 100. That's fun. I've never had tomahawk steak, Mish. 69. That's fucking idiots. Sorry, Bad Buddha. No, I'm killing the mods. But yeah, tomorrow, guys, in the morning, 8:30 in the morning, join me here on Twitch for pre-market prep. I will be, 1 hour before the open, obviously 8:30 a.m. Eastern time, and we'll be charting out QQQ, SPY, AMD, NVIDIA, going over my directional analysis as well as, trading. So let's see, roll it, waiting for a winner. Oh, winning number. Oh, shit, dude. No one won. Oh, dude, I'm putting this on the stream. All right. Fuck it. We'll just do June. All right, Cam Limick. Cam Limick. He's been following since February 20th. Make sure you guys DM me on Twitch. I'll be having more of the giveaways this week. Just a couple more during the EDU session. So, but I will see you guys tomorrow morning, right? I really hope that you guys this helps you out, right? If this live session helps you out, you can type a 1 in the chat. Type a 0 if it didn't help, but I hope that it did. So, but I will catch you guys later. I hope that you guys have a good night and get some rest, right? Prepare yourself for the trading session ahead of us and remain unbiased during your trading, okay? Be patient tomorrow. Focus on your own proper setups and, accept the risk, right? Also, if you want to join the Discord, here is the Discord link in the chat right there. And see you guys later. Take it easy.